Assalamualaikum warahmatullahi wabarakatuh. I'm Majid in Malawi, matric number 2018832532, which want to present about the impact of the COVID-19 to the investment. As introduction, pandemic COVID-19 spread to all 222 countries with 147,886,536 positive cases and with 3,124,726 deaths. Effect of the whole changes of human life norma also affect for the economic cycle, also supply chain of the business, which can direct impact for the investment industry. Within this presentation, we've tried to emphasize to those two types of investment impact, which we call as a stock market and real estate investment. Within the stock market, we use the S&P 500 index by USA. It's shown that it's declined around 35.6% between 30 January 2020 when the WHO declared COVID-19 as a pandemic is health emergency of the international concern, which stayed 3,392 USD to 2,185 USD on the floor on 23rd March 2020. Shareholders have released their holding on the large scale as a transaction volume data at the bottom of figure 2 in short period of time. These tremendous selling activities occurred to profit-taking activities and prevent more risk exposure between investors. On the figure 3 and figure 4, the crash just happened in the first and second quarter of the 2020 and make slow and do correction to strengthen back the market. The strength make the market much stronger, which the price create new higher high than before. Market also hedged to the number of debt release statistic, which only in positive impact in the first quarter 2020. Show a positive impact on 18 January 2020, which global debt are at the peak, but the market price keep climbing and make new higher high level. Beside of COVID-19, which impact the social economic with decrease of high wages rate and high of household debt, is this investment still irrelevant? Based on figure 5, the HPI index in Malaysia price just fall only on the 1998 and 1999, which was on the period of 1997 Asian financial crisis. Other than that, although it has gone through various pandemic phases such as SARS, swine flu pandemic, shown has less of impact on the country house price. HPI shown strengthened where the percentage of HPI from 1999 can be seen at only negative 2.3% and continues to increase at the level of over than 25% in the third quarter of 2019. Figure 5 and figure 6 shown that even though the stock either is a lag or surplus, the HPI house pricing index still can keep increasing, and this investment value is hedged from all circumstance, also unstable situation, and this can be one of the good option if you want to invest. Maybe we know the real estate investment is much better investment, which we know the market value is quite high, also hedged to the some obstacle of the economic situation. But investors also need to overcome those obstacles during this COVID-19. First, as we know, the wages growth rate could be lower or zero during the crisis, and the unemployment rate also high. Low wages will lead to the negative household debt servicing capacity. Financial services such a bank will be tighten their lending term and condition to minimize their risk exposure to the default from mortgage payment. Those financial issues will open up the opportunity to the cash buyer which not depend to this financial service to get the unit. Unit holder or owner will not sell their unit. As we know, current is the recession period of the price where this is able to decrease their wealth. Buy their sell in lower price, which they can wait for the other peak of the current situation of economic to get more wealth or get a good price of the house and properties. I'm Majid. Thank you for watching.